Well, how's it going, everybody? It is Friday, May 24th, and this is going to be a wonderful episode. Is it ever not? I ask myself, because Luke and I will interview Fabian Baker of Kingrose later on, as well as cover 5 stories today, revisiting a story or a couple of stories actually from previous weeks. One from last week. There's a little bit of a min-twit drama. We always like that part. But first, of course, market overview. This was a bit of an opposite week to last week in that the green that I saw over my screen last week sort of turned red this week. Whereas, for example, last week most metals were up. This week, most of them are in the red. And gold started the week promisingly, going from 2,400 to 2,450. But then Canadians got back to work and ruined the party, I guess, punishing gold. So it pushed it below 2,350. That is down a couple of percent for the week in total. And jokes aside, it's basically the same old, same old. Good news is bad news because we had some PMIs showing business activity speeding up in the US, unemployment numbers being less than expected, and meeting minutes from the Fed showing that they're still concerned about inflation not being where they thought it would be. And I, by the way, discussed that with Dylan Smith on Wednesday, so go and watch that video for more information on that. But essentially, gold's price movements are now, as they have been over the last couple of years, driven by investors playing sort of hot potato with Fed expectations, resulting in 5+% drops in both the GDX and the GDXJ ETFs. Silver, comparable dynamics there, of course, about the same percentage drop. Only it's what is it? It is keeping strong above $30 seems to be very strong support for silver, but the SIL and the SILJ ETFs are both down about 4% this week. Top 3 worst performers this week in the commodity space were actually not gold and silver, though. Platinum actually led those losers by falling about 6%. No specific reason, actually, or based on what I could find. Most of the things I read about platinum are actually bullish, relating to lower output, higher than expected demand. No, lower output, lower than expected demand, I mean, due to EVs disappointing both in real life utility and sales. And so I don't know why platinum is down this week specifically, but generally long term, it still seems like it's fine. Platinum was followed by copper this week, down about 5%, second worst performing commodity, losing that legendary $5 support, which turned out to be just as supportive as my wife is when I tell her that I'd like to buy more junior mining stocks, which is to say not very, but not surprising either. Well, I mean the copper thing, not my wife. Mostly because, as I said last week, with China's announcements, you typically see a lot of sort of artificial demand come in on the back of that, trying to sort of front run that real life demand, if you will. And so speculative demand from money managers and so on and so forth, who typically hold positions for about 15 minutes on average. And that's actually not a joke. They typically don't hold positions for that long or something like that. So not necessarily copper bulls for any major fundamental reasons. But so, yeah, basically what happened last week, China news, big news to historic measures that they're taking, if you will, combined with less supplies and with less supply, more supply issues basically, but also transporting issues. All of that resulted in quote new money coming in, and now with some more news out of China showing copper import numbers at lower values than expected, and that new money likes money, so it's profit taking time. I guess that's kind of what's happening. That's what it comes down to for copper. Nothing major has changed for the long term either. We haven't found new 5 escondidas this last week, unfortunately, that will kill the thesis. So it's mostly short term price fluctuations as far as I could figure it out, which to me is also supported by so that belief that the long term is still fine is to me supported by Sprott's move into the copper market. First earlier this year, they launched that copper miners ETF. And then last week, they launched that physical vehicle to buy and hold copper. Well, they filed a preliminary prospectus for a physical trust, which just like the physical uranium trust is, again, meant to hold copper in storage and just kind of sit on it, essentially adding fuel to the fire by increasing demand, sending copper to copper heaven. And then the third worst performer of this week was oil, following kind of a similar path to that of gold and silver, interestingly enough. But again, based on Fed talks, rate cuts, yada, 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 but also exacerbated by the EIA data that said that inventories in the US are going quicker and are getting larger than expected. supposedly in preparation for what's to come on June 2, which is well, that's only in about a week or so, where production cuts and production cut extensions are expected, and so higher prices are expected to come on the back of that. So this might be in preparation, storage, increasing storage in preparation for that, which might be part of the reason why oil has raised all of the gains from the last 3 months or so. So as to the top three best performing commodities, we have potatoes at number one. So it's up nearly 50% this week. And apparently it's because there was an oversupply in the potato market last year, and we're still working through, and I'm not making this up. It sounds like I'm making it up. I'm not. But we're still working through above ground inventories where prices fell, surpassing their the all-in sustaining costs for potato production, I suppose, and so curtailing the inflows of capital into the market, resulting in what now seems to be a supply deficit. And the way Sprott's been going about business, we might soon enough see a physical potato trust, call it Spud. But hopefully we don't see a black market for Belgian fries, or something, which, by the way, that's the correct way to say it. They're obviously not French fries, and I will debate you on it in the comments if you disagree. Or maybe we can talk about a potato-backed currency if that's what you're into, and it'll probably still be better than it being backed by nothing. Anyways, cocoa and wheat were also in and around 10% up this week as the second and third best performing commodities, but I feel like I've tried being funny for long enough today, and the cocoa thesis is also being well covered. And it makes me even more bullish on West Africa, which I don't know if we're going to be talking about that, but I just thought I'd throw it in there. Which is actually maybe a good point for me to shut up, Luke, and give it over to you. You've sent me a list of runners this week. Like every week, there seems to be a big runner. This week, we have one company, Strategic Energy Resources, it is up nearly 200%. What's volume is 3.2 million bucks. Again, this is on the ASX, so volumes will typically be higher than the TSX-V. But what's happening there?
Yeah, this is interesting again. I never heard of this company. I just saw it this morning when I looked at my list, and apparently it's something that follows a little bit on our conversation last week. Because last week we talked about Australian gold and copper, a company making a discovery in the South Cobar Basin. It was a gold, silver, copper discovery, and the market got excited. After our conversation on Friday, I think we convinced everyone because it went from 30 cents to 50, almost 60, I think, cents. So on again, a lot of volume, $10 million. And interestingly, that this company, the Strategic Energy Company, they have a project immediately south of Australian copper and gold, and they have a project with the same name, even Achilles 1, and Australian gold and copper has Achilles 3. It's literally like 4 or 5 kilometers south, and they are the same trend. People are saying on the chat boards that this company, that Australian gold and copper, was trying to get this ground as well, but that this company was ahead of them. And now, of course, they will start looking in that same trend because everybody likes it. It's almost like an area play, and perhaps it is in a way, because Australian gold and copper is already above 100 million, which is, in my eyes, ridiculous. But that's what happens with discoveries. One day you have nothing, and one day you have everything, and it could actually turn out to be a real discovery and go even higher. You never know, but based on current knowledge, I think it's gone a bit too far. And in the news rumors, we saw this. The Money Miners with their podcast, they also have a newsletter, and they wrote that Willem Middelkoop is potentially responsible for the move in Australian gold and copper.
For the whole move?
Well, they were saying that the word is that he is responsible for the recent share price appreciation, FOMOing into the stock market. Well,
But
the good thing is that they don't have to do a financing. So everybody who wants to own Australian gold, copper and gold, or gold and copper, has to go into the market. And they are saying that Willem is, with his fund, is responsible for this run.
but total volume, I think you put it on here for Australian gold and copper since that started. So over the last 8 days, that's over 23 million. I think Willem Middelkoop's fund is what, about 200 million? I don't know. Is it? I think it's about 200 million, right?
Yeah, I think I didn't check recently, but it was 100 million euro, I think. So about
Okay.
160 million Australian. I very much doubt this suggestion or statement. Uh, a company, I mean, they are a discovery fund, so it wouldn't surprise me that they bought some stock in the market. If they are very, very convinced, maybe they would take a million or two, which I don't think, well, but could be the case, but it's very unlikely that they would have bought 10%. I don't think they are even allowed under their own uh, rules of engagement. I mean, they have their fund rules as well. I don't think they can even own 10% of the fund in one stock. So
Hmm.
I think for them, a $2 million investment would be a big investment. And I doubt that they already put in 2 million in a one whole story like this. So in my opinion, they could be 10% of this volume or 15% in the absolute maximum case. But if I had to guess, it would rather be 5% or 1% or 2%. So
How
I
much
very much doubt the statement that they are responsible for this FOMO.
how much does it take to move the stock price in a case like this, do you think, with this kind of volume?
Well, here you can see it. I mean, it took 23 million to go from 10 cents, I believe it was before the discovery, or 7, 8 cents to 50 cents. And of course, there's a lot of trading involved as well. Some people buy and sell probably in the process, but I just look at the total dollar volume. It took Hercules Silver with all their warrants about 30 or 40 million to double and then triple. And I think eventually they had 60 or 70 million of volume in the months after.
Mm.
Australian market has more volume, and in this case, $24 million since the day of discovery announcement. So it is liquid, way more liquid than Canadian discoveries typically are. And that's why I think it's very difficult to suggest unless you really have some proof, but I doubt that CD fund has a really big role in this share price move. I just think that there's a lot of discovery punters on the ASX and the complete market looking at this discovery, waiting already for a long time for a gold or silver discovery, are jumping into this story because it's interesting. But I still think it got ahead of itself a little bit. So that's how I look at it. So I doubt that suggestion about CD fund being responsible for this move.
Yeah, it seems like volumes are generally way different on the ASX too. I'm trying to look through whatever else you send me, but yeah, I think we've talked about that last year as well. Yeah, I don't know what to think. Like I'm thinking also, could they have started the FOMO and what else could have happened? But I mean, yeah, it is a big move. Maybe not one party's responsible for it. I can see that. What what else are we talking about? We've talked about Australian gold quite a lot over the last couple of weeks. What else do you have on here that's going up? I suppose the next in the list is up only what 56% Koryx copper.
Yeah, Koryx copper.
Interesting.
Yeah,
Yeah, interesting that it's up because they did a financing.
yeah.
Um,
They announced a $2
so
million financing. That's the news of the week.
well, it's not
Um,
supposed to go up. Why is it not down?
yeah, something similar happened recently with Midnight Sun mining. African projects and copper, both of them, I think, are getting more popular. Personally, I wasn't investing in Africa a whole lot. I knew a couple of people who did, but there was always a bit of skepticism. I feel like that's changing a little bit because in South America, there's also a lot of trouble, and there are African countries that are safer, like Namibia. I don't know enough about Zambia to make a good statement there, but Namibia is certainly one of the better ones. And Koryx is in Namibia with a copper project. So copper combined with Namibia, combined with the financing. I think there must be some smart money coming in here. Typically, companies do not really go up on really increased volume if there is not a good set of buyers available. Typically, financings are not very popular. I do sometimes buy stocks when I see a financing and I see a new name coming in, and I think that name is not just there for that one investment, but also signals a level of due diligence, or it signals a level of market support. I mean, certain names like the Lundins as well, for example. Uh, signal more than just, hey, this is a good project, or hey, they're coming in. Things typically become easier when people like that invest. And Koryx Copper is a very noteworthy runner on a $2 million financing. It's a very big project. They have a $1.4 billion MPV. It's a 0.3% copper project, but it's big. And the CEO has been saying in interviews that they are trying to increase the grade, potentially by drilling in different directions. They realize that the grade is not very high, but they think that if they can get it up a 0.1 or 0.2% to 0.5% copper with this tonnage, I think 800 million tons, in a market where copper is becoming popular, yeah, that's probably the right mix. The thing that people are looking for right now. I was talking to a fund manager today who's also really looking into copper, have been doing many financings in the copper space. So yeah, I think it's a function of copper and potentially good buyers in this financing.
Yeah, this is KRY in the Ventures Exchange, but the share structure is blown out. I don't assume you like it.
No, they have issued quite a bit of warrants in the last financing and also in the September financing. There's I think a 10-cent warrant layer, but the layer was not strong enough to keep it down. So that's why it convinces me even more that it's not just another $2 million financing. When stocks start going up 3 or 4x in a very short period of time, without meaningful news, but with financings, yeah, that's not just because of the $2 million financing. There is more to it. Whether that is a drill result that's not disclosed yet, whether it's a several investors that are coming in. I mean, a stock doesn't go up for no reason in most cases. Copper is going up, so copper is certainly part of it, I think. I've heard many people talk about copper recently. I'm not that person myself. I'm not buying copper just because everybody likes copper or because the copper thesis is in play right now. But I know that many people like following those streams of capital, and I think that's certainly part of it, but not the complete thing.
Right. It's also the volume is interesting. Like it happened. The market's really been open for a couple of hours now on Friday as we're recording this, but there's not the same volume based on what I can see on here as what it had yesterday on Thursday. So we see, yeah, interesting to see if it keeps going up. Maybe news next week. We'll see. Maybe we can cover that next week if it's got news. Kind of like with the other story that we covered, what, last week or the week before that? I don't know. That then came out with news. The other names that you have on here have decent run-ups, but on basically no volume. I mean, you have Targa Exploration on here. It's up 50%. It's an 8-cent stock. That's TEX, and that's on the CSE. It's got $150,000 of volume, but it's up 50%. What's happening there?
Yeah, the reason I wanted to highlight it is that I've been following Targa now for about 5 months. I got to know about it early in the year when I met with Kinorland, and they highlighted that Targa just announced a very interesting soils anomaly from the soil sampling program. And they were looking for lithium. They found a lot of gold and really impressive soil sampling program or result. And in most cases, people do not get really excited about soil sampling. But when somebody with a real exploration and discovery background, Kinorland, is very excited. Of course, they are talking their own book in a way because they own a royalty, but they are genuinely excited by this target, and they explain you about it. You realize, okay, what are the odds that if you do such a big program and basically without expecting it, you find a major gold anomaly like they did with their previous discoveries, like Frotet, for example, then a company with a $3 or $4 million market cap, of course, becomes in play because you can start thinking about, hey, what if they also make a discovery? It's not very far from Eleanor, a discovery in 2004 by Virginia. So then you start imagining like, okay, maybe this is the early days of a big discovery. This is a $3 or $4 million stock. What if they make such a discovery? Well, it could go up. The market cap could go up 100x. So I completely get why people get excited from this. I got excited myself, but there was a financing, free trading a month or something after my conversation, so I decided to wait. And indeed, the stock went down to 7 or 6 cents. I typically look at the warrants. I typically look at the financials and the financings. And when they come free trading, people typically sell because all those investors did get a warrant. And why own the stock if you have a warrant? And you don't have to take a real risk. You just sell it, and your warrant will give you the upside if they do something good. But in the meantime, they did another financing, and the company was, I wouldn't say, well, maybe I should say promoted by Mining Stock Education. Not promoted in the bad way of the word. I think I like Mining Stock Education. They have a good product, but they started covering Targa, and they have a lot of US investors following them. I think those US investors probably never heard of Targa, and I think partly as a result of that promotion, the stock is up from 8 to 12 cents.
That's an Inventa Capital company, right? That's what I'm trying to figure out.
Yeah, it's combined. It's an Inventa company and a Discovery Group company. So Discovery Group is the company behind Great Bear. Inventa is the company behind Vizsla. So two groups. Then you have Kinroland, who vended the project. They still have royalty. So you basically have three groups, you could say, all with their own qualities, all with success, all with discoveries behind their name. And those three groups together are running this company. Kinroland is still the company operating on the ground. So you have good people who made discoveries before, who know Quebec very well. They are operating the project on the ground. And then you have these two groups from Vancouver behind it. So you can completely see why people are excited. The only reason I didn't buy yet is because of the several financings that were done. And I was expecting people to sell on the free trading date, which happened. But then another financing came out. Maybe I should have participated in that one because I do like it. I do like this story. But this year will be a year of more sampling. And at the earliest after the summer, somewhere towards the winter, they will drill. But it's likely that the drilling will only start happening in 2025.
Okay. Interesting that it's both Discovery and Inventa, though. Why is that? I mean, what's the thinking here?
To be honest, I don't know how this happened. I know that Craig Perry is involved and also John Roberts is involved. Kinroland vended the project, so for some reason, to be honest, I didn't look into the start of this project, of this company, because the company was started for the lithium, as a lithium company. So there were likely some synergies. Perhaps they vended some properties from both groups into this company. I don't really know the background, but I do see that there's a director from the Discovery Group, Andrew Rockandel. He's a Discovery Group director, or at least he's the director of several companies. And Jim Peterson and John Robbins are both advisors. They are Discovery Group. So it is the signature is all over it. But the origins of these two groups working together on this one, I don't know. It's not completely unique. You see that every now and then. I've seen this with the Pathway Group as well, together with Ross Beatty's group. For example, in Solaris, a much bigger company. So they again, we refer to Dave Lotan's talk every now and then because he coined the phrase, I think, of these different cohorts of networks. And here you have two networks working together in one company. A very promising company, but also a very risky company because it's very early stage. And I think this gold anomaly is the key thing right now.
Okay. Yeah. Good. Well, I don't want to dwell too long on it because we have Fabian's going to be coming in a couple of minutes here. And we have a couple of more stories to go through. You have, what else do you have on here? Midnight Sun. That's TSX-V, MMA, so MMA, up 50%, but 3 times the volume of what we just talked about with Targa. 400, almost $500 of volume, moving this up 50%. Again, it's not, I mean, it's not too much that moves these stocks. It's not nothing, of course, especially because of TSX-V. But if someone's listening from, mainstream equities or whatever, these are laughable volumes.
Yeah. Well, in our junior mining world, this is actually quite a bit of volume. This is the reason I highlighted this one this is another one, and not just because I missed out on it again. I am getting more careful and in jumping into stories, and that's why I start missing things. A lot of these names I've seen and I didn't act on them, like Australian gold and copper. I didn't act properly on it, and but that's fine. I try to be very convinced when I buy something. And Midnight Sun, I was looking at it for a long time, and when it was going up to 21, 22 cents, they got financing done a bit like Koryx, we just discussed. And I think Midnight Sun got a lot of interest from institutions and wealthier investors in Toronto. And there was even a good letter writer, well, not really a letter writer, but a capital group, Hydra Capital. They write a letter every now and then. It's a very good site, by the way. Google it, Hydra Capital. They wrote about it as well, and they explained the thesis of this company. And I was reading it and felt like, yeah, I've been following it. Maybe I should buy it. And the next day it started going up like crazy. It went to 26, 27 cents, and now it's 39 already. So I just missed it, and that's fine. But another copper story in Africa. They have a deal with not really they have a sort of a deal with First Quantum to explore a project, Midnight Sun project, together with them because First Quantum has a project north of them, and they could need some or they need some more feed, and that's why there's interest to explore together and try to find some more copper there in Zambia, very close to the Congo border. And they also have a project, I think, themselves, a 100% project that they are exploring. So a bit like Koryx, I think. A copper story in Africa with good following, and when suddenly good people start investing and start talking to each other, it often has an effect that things like this happen. Stocks just double or triple within a number of weeks because people get excited and follow each other into these things after they have been forgotten for years.
That seems to be the case in this space. Like a lot of people like following. We always say like we're just chit-chatting about stuff that you've seen or I've seen throughout the week. There's no recommendations being made here, not only as just a disclaimer or whatever it might be, but just because these things are dangerous to do. This seems to be working out, but still most people just want to follow. Like I get emails every week after these shows. Like, what do you think about that? Should I buy it? How much should I buy? Is it going to go up? Is it going to go down? What do you think? And I'm sure you get these things too. Yeah. It's interesting. This what do you do actually with these type of emails?
Yeah, I try to answer all the emails I get, and if it's a company I don't know anything about, and I open it, and by the first looks of it, I just don't like it enough, then I just tell them honestly, like I don't know it, and the first looks are not promising to me, not at least based on my criteria. So I cannot say anything about it. If I know the company, I'm gonna give my opinion about it. Including some warnings if I see any warnings, because there's always risk. I'm not emphasizing the risk maybe enough, but I always assume that everybody in this business knows or should know that every company, including the producers, are extremely risky. Extremely risky. Even a company with one or two producing assets, if one of them goes wrong, then suddenly 50% of the company's reason to exist, disappears almost. So even a company like Franco-Nevada can go down if one mine shuts, and that shows that even the best companies in the world, the biggest companies, the best capitalized companies, can go down 30 or 40% if one mine fails. Let alone these tiny companies we are talking about.
Yeah. Talking about newsletter writers, and I know I'm kind of jumping through topics, but I'm just reminded of, did you see that Gwen Preston is now going to work for West Red Lake, also a company I think we've discussed a couple of times before?
Well, I think she already did, right? I think I have followed West Red Lake a little bit, and I think she was already on site probably, 6 or 8 months ago, if not longer. So it doesn't surprise me. It is a company by Frank Justra. It's also, well promoted, and you need to promote it. I don't always like the promotion style of Frank's companies. It's sometimes a bit too much for me. It puts me off because if every video I watch has a West Red Lake advertisement in it, then I feel like it's a bit over the top. But everybody has his own style in this business, and and that's their style, in my opinion. But yeah, I mean, Frank has been behind really successful companies over his career, so I don't want to be negative. It's just not my style, and if I see a company that he gets involved in, and I believe they have a good project and a good team, and I think his involvement could really make a difference, I would still invest in it. But if I see all these promotion campaigns coming one after the other, it's not typically my thing.
Same. I totally agree with that. Although obviously maybe a little bit biased on the other side too, because that's basically how this channel makes money for me. Although it's not, yeah, I suppose. Anyways, longer conversation to be had. Anything else to discuss before we let Fabian in?
Yeah, I think that's a nice conversation to have. Like, we talk about promotion a lot. Like, what is minimum promotion? I mean, you need to do promotion. If you don't tell anything how to find a company between the 3,000 other ones, or maybe 5,000 other ones. So maybe we should do the topic of promotion soon, with perhaps a guest joining us and reviewing the different types of promotion in the space, and give some opinions about it.
Yeah, I'd like that. I think about that a lot myself because I deal with the issuers on that side of the business too. So I have thoughts. I don't typically have thoughts, or try not to have too many because otherwise I might faint. But I do have a couple of thoughts on this topic. But good. So let's see. Letting Fabian in now.
Yeah, I mean, we shouldn't let him wait any longer because he's already waiting for an hour or something. So let's get him in to the room.
All right. Well, Fabian, I suppose you and Luke know each other. I mean, I've heard of you. I've been told that this is actually your second CEO position here. You look to be of young age. Feel free to tell me how old you are. But yeah, who are you? I mean, tell me more about you. I don't even know who you are, so tell me.
Sure. I'm 37, since you asked.
Good.
And professionally, I'm a geologist by background. Studied geology, and went really not knowing quite what this industry could hold into a really exciting first job. I was hired by a company called Lydian International. It was a TSX listed company, run by a guy called Tim Coughlin, who's now on the board of Kingrose, the company I'm running today. But Tim's an exceptional explorer, and he, after a career in some of the majors, struck out on his own to Armenia, recognizing it had the right geology to discover copper and gold deposits, and he essentially made a grassroots gold discovery. And I was really fortunate to be involved in that from an early age, and at the beginning of my career. And essentially, we took that from a rock chip right the way through to a 5 million ounce gold deposit with and a bankable feasibility study. So that was an exceptional sort of story to be a part of, and see a project, through all of those stages, basically, to feasibility study.
You also got into your first CEO position. How old were you when you got into your first CEO position?
Yeah, well. So after Lydian, I went on and explored and helped a few other companies get going, and then in a tough market in 2015, 16, I struck out and founded the company called Tethyan Resources. And at that time, I was 29 years old when I was CEO of that one. But I was really fortunate to have some great mentors and some really experienced people around me. And it is a question I get from time to time, and also from my peers, those that coming up in their careers around me. I got into these roles as a CEO at a young age, but these things are never a one man show, and that's something I recognized early on, and I recognized that there were people around me that had fantastic experience, had deep networks, a track record. And actually, that's something that, I could lean on, and, we could be mutually benefit each other. So I was the young, energetic guy putting in the long hours, and bringing that sort of entrepreneurial spirit to get something new started. But then I had the ability to lean on experienced people with networks, great knowledge in terms of understanding mineral deposits and the potential of the things we were getting involved in. So I think by recognizing how to basically work as a team and leverage the skills that each person brings, well, that's the best way to really create success. And that's really how I got into my roles in these sort of management positions.
Well, I'm 28 years old, and I spend most of my day in mostly a dark room looking at ventures exchange stocks, and so I've got about a year to catch up, and I don't like my odds. What you also worked with Richard Warke, I believe, for well, what he was kind of like at the start of your career, I suppose, a very important man. We covered his story. There's not many interviews of him, but like he doesn't talk too much publicly. How was working with him?
Sure. Well, first of all, working with him, you learn a lot. A guy like that who's been so incredibly successful multiple times, you get a fantastic insight into that mindset, what they value, how they focus their time, how they focus their efforts. So that's really valuable. How I got involved was that first company I founded, Tethyan Resources. We went into Serbia, recognizing exceptional geology. This was at the time where Reservoir Minerals had made a fantastic discovery in the Bor or Timok belt in the east of the country. But there's another mineral belt which swings through Kosovo into Serbia with a number of historical mines. It's a famous mining area called Trepča, which was a lead zinc mining district. And we went in there and recognized that actually there were copper gold porphyries that were driving these lead zinc systems. So you had the opportunity to discover both higher grade lead zinc silver as well as new copper gold porphyry systems. And we had got that going for about 2 years, consolidated a great mineral district in that area. And that was just following Richard's huge success at Arizona Mining, which he was the lead zinc deposit that he sold for 2.1 billion Canadian to South 32. So they as a team and as a group were looking for new opportunities to get behind. A couple of key people in that group I'd spent time getting to know. They valued me and our team as good quality operators. And so Richard came in as a cornerstone shareholder, joined the board as executive chairman, and helped us grow that business until ultimately we sold it to Adriatic Metals about nearly 4 years ago now.
Yeah, I appreciate your diplomatic answer, and I appreciate you being political about this. I was hoping for a spicy story. I mean, I know it's good working with us people, but I don't imagine it's always easy working with strong leaders. What he's proven to be, I suppose.
That's true, absolutely. I think with what I experienced there was a real focus on the business being a success and that really taking priority. So certainly there was the ability for Richard to be very focused on the business and making decisions that really were unemotional and focused on what he felt the business needed. He's a shrewd investor as well as a leader and a chairman role. So he was certainly always looking at how he could optimize not only his own value creation, but by virtue of that the value creation for all of our shareholders. So look, I'm not going to go into any specific spicy stories. We certainly had times where there were heated conversations, and these are good things on a board because it means people are bringing ideas and trying to work out what the best route to drive a company forwards is.
If you look back at your career so far, is there a point in time where you think, if this didn't happen, I wouldn't have been here? Because sometimes, I mean, it's not, it's never just luck. It's never just effort. I think a lot of people have effort, but do not get in the same spot you get. So it's always a mix, and I'm not trying to take anything away from your success so far, because we are impressed for sure. But are there certain points in your career where you think, if this didn't happen, I wouldn't have been here in this spot in my second CEO role, running a company with 40 million in the bank, in a sort of luxury position compared to many juniors?
Yeah, sure. I look back and I wonder about those things. There's never one answer, to just sort of one thing I can point to for how I got to the position I'm in today. But I think surrounding yourself with good people, good quality people, is absolutely key. That's having a long-term vision. So I think in business you can be presented with opportunities that offer a near-term success, an opportunity in the immediate term, but maybe could lead to maybe aren't so reputable. So what I try to do is surround myself with people with good, honest reputations. I think, tenacity, sticking at something, and working hard really is ultimately the key. But doing that with good people around you. And I think, this business exploration is incredibly high risk. You're always going to make mistakes. Any path you take, you can question it. And hindsight's 2020. You can look back and go, well, I would have changed that, or we shouldn't have done that. But ultimately, you've got to make decisions with the information you have at the time and keep moving forwards. There will be mistakes that are made. If you've got a good team around you and you work hard, then you can work hard to fix those mistakes or change your strategy and direction. So for me, I think it's identifying, being true to myself about good assets, good people, and then not being afraid to actually change direction. If something's not working, then switch. Actually, the beginnings of that company, Tethyan in Serbia, started in Morocco. We had an idea for early stage exploration there, and we put some time and money into it. But it was in a market that really wasn't going to fund early stage exploration, and we weren't seeing the results that we needed. So we switched it and looked at slightly more advanced exploration projects, different commodities, and a slightly different approach. So yeah, I think as I say, trying to look to the long term and make those good, honest decisions ultimately builds a good reputation for yourself. And that will bring other good people in around you who support you for the long term. Those are the sorts of people that you want in your corner. And that's
I think everyone would like to surround himself with the Warkes and the Lundins and those types. Not everybody, those guys do not want to surround anyone. So not everyone. So you have done something that they liked enough to support you in your career at least. And after selling Tethyan, you entered Kingrose. I mean, how did that entry go? Was that a connection? Was that something you already eyed for a long time, or how did you get into that position?
Well, it's funny how that's come full circle. What I didn't mention is while I was at university, studying geology, but really not knowing quite what I'd do in a career in geology, I had the chance to look for an industry placement. And I still live on a small island called Jersey, between England and France. And it just so happens that I found out about a guy, Mike Andrews, who's an experienced geologist who was just building a gold mine in Indonesia. And that just so happens to be Mike, the chairman of Kingrose today. And they were just building the Walingo gold mine in Indonesia. So I got the chance to go and spend 2 months on the project as a student. After that, I went and spent another 10 years doing some of the things that we've just talked about. But Mike also came in as an investor in Tethyan, joined the board, was a really great supporter of ours in Tethyan. And so when we had sold Tethyan, that was at the same time that the mine that Kingrose had in Indonesia was closing. And so Mike had seen me and the wider team, key people like Andrew Tunningley, our head of exploration now at Kingrose. He asked me and some of the team, would we come across and help set a new strategy for Kingrose? So there was some connection there. Obviously, I delivered in his eyes in Tethyan and represented a good candidate to come on and take on Kingrose and give that a new direction.
And did you already have an idea? Because I think you changed the company quite a bit. It was a very different company. I looked at the chart as well. I mean, the company had a big run in the 2009, 10, 11 years, I think, because of the Indonesian project. What was the reason to step away from that project? And where is the 40 million or so you have in the bank coming from?
Sure. Yeah. Absolutely. Company today is completely different to what it was previously. So the company listed in 2007 with the sole focus to build the Walingo high-grade gold silver mine in Indonesia. This was actually a gold deposit that Mike, our chairman, discovered while working for a mid-tier company. It was too small for them at the time, so he took it on and moved it forwards. And early in its life, when it got into production in 2010, it was an exceptional high-grade deposit. So it was only ever small. In total, it produced 200,000 ounces of gold and about 1.5 million ounces of silver. But I think the average grade in the first year of production was 17 grams gold and nearly 300 grams silver. And it was the lowest cost gold producer on the whole of the ASX. So even producing 30,000 ounces a year, where their all-in cash costs after the silver credit were less than $200, they were making sort of 1,500 US an ounce margin. So it was an incredibly profitable small high-grade gold silver deposit. However, it was small, and after a few good years, it hit a number of issues. They had geotechnical issues, underground water issues, and the mine became a lot less economic. And so it had gone bankrupt at one point. The company had managed to get it back into production and generate some positive cash flow. But it was so focused on eking out a profit from the mine that they weren't spending any money on exploration. So they had no exploration team anymore, and they didn't have any pipeline assets. So ultimately, in 2020, when the mine came to a close, the company was sort of stranded. It had built up a 35 million Australian dollar cash position, but it had no exploration pipeline, no additional assets, and really shareholders didn't see a strategy. It did have about 180,000 ounces still at depth, at about 5 grams gold. The company had been considering putting that back into production. When I joined, I did some simple maths looking at the history of the deposit and realized you needed almost 6 grams just to break even. So for me, I just had to gain the fortunate position to come into the company fresh, with new eyes, and not being in love with an asset. I could look at it more objectively and basically determine that even if we could grow the resource slightly, get it back into production, the potential upside was really limited. And I think most people investing in the junior exploration or junior mining space are looking for multiples on their investment. And I just didn't see that happening. In addition, Indonesia is not an easy place to operate, and it's become increasingly difficult. So when that project went into production, the mining law and the situation was a bit more favorable to foreign companies. That's become more difficult. So that was my view on it. We weren't just going to walk away without testing it a little bit more. We did reform an exploration team. We did some excellent work. Rather than small resource additions that the company were doing previously, we were much more aggressive. We stepped out 200 meters every drill hole. And actually we added more than doubled the resource to nearly 400,000 ounces and increased the grade to over 8 grams as an average grade. So that was a good exploration win. Still didn't justify us trying to build it, but it helped us sell the asset. So in the end, we sold that asset to a local mining company. And so that sort of closed that chapter of the Kingrose book and allowed us to go on and do new things, basically, with the cash that we had.
You mentioned multiples there. That's what people are really in a story for, I suppose. That's what people are taking the risk here. Is that still doable here with Kingrose? And I suppose you're going to say yes, but expand on that as well. I mean, you're getting BHP involved into this. How do you see multiples working now that BHP is involved?
Sure. Well, so when we had sold the mine, we looked around the world, thinking, well, we're going to go back to an exploration focus to create value through discovery. Where do we want to explore? What sorts of commodities? And we looked at a lot of different areas, but ultimately we landed on the Nordic region, Scandinavia, and we made a first acquisition of a small private company with a very high grade platinum group elements deposit in Finland. We've gone on to add a brownfields nickel copper cobalt deposit in Norway, and then build up this huge regional exploration opportunity, which is the one that BHP's backed. So I can talk a little bit more about that, but I think what we had the opportunity to do was, again, take a look from a bird's eye view at the region, understand what are the known deposits, what are the known mineral belts, and where do we see potential for, first of all, large and high-grade deposits, and also what is the competitive environment like. So for us, going into the central Lapland Greenstone Belt, which is really been the most successful region in terms of large deposits in Finland, it's entirely staked. You've got Europe's largest gold mine that Agnico Eagle operate, called Kittilä. The more recent success of Rupert Resources in there. And then on the nickel copper PGE side, you have Kevitsa, which is a large producing mine and a fantastic discovery by Anglo American of Sakatti, which is a really world-class high-grade nickel sulfide deposit. So that area looked really compelling, but very competitive. And we noticed that the same mineral belt appeared to continue north into Norway. And Norway had really been overlooked from an exploration point of view, and it was unstaked. So that's really the concept that we brought to BHP, that there's an entire mineral belt here that's an extension of Europe's most significant gold and sulfide nickel copper mineral belt, and it's completely underexplored and unstaked. So that was the concept we brought. And when it comes to multiples, well, I think given the analogs in the belt, the value of those mineral deposits, those were the opportunities that we saw could be discovered there, and those could be $1 billion plus assets. So in terms of where we sit today, trading at around a $40 million market cap, if we can discover an asset of the likes of some of the other deposits in the mineral belt, well, then I think there's real potential for that 5-10 times plus multiple on our share price.
And I'm interested in where I'm coming from with this, because I'm interested in the overall dynamics of these partnerships, specifically wondering about alignment and sort of how aligned are large miners with small shareholders. Like if I were to buy Kingrose today, I'd want to make money on the stock, right? And that's pretty much it. Whereas BHP doesn't necessarily care about the value of my $2,000 of shares. They want to find an advance in mine in a way and on a schedule that works well for them, right? Again, with that end goal in mind being a mine and not necessarily share price appreciation. And so what happens, and is there really anything in place to ensure sort of shareholder protection, if you will, if in the case of BHP not wanting to move forward like you or other shareholders might want to move forward?
Yeah, look, you've hit the nail on the head there. Was really important to me, and it's actually why in my career to date I've done very few joint ventures. For me, if we believe in the potential of an asset, of an exploration opportunity, well, then we want to own that, and we want to have conviction in that, and we want to own the upside, and we'll be deploying our own capital towards that. This scenario, though, was a bit different. We recognized the opportunity, but it is at a very early stage, and we've been in a market where your typical equity capital markets really aren't funding early stage generative exploration to the scale that's needed to be successful. These things do take quite significant amounts of money and time to be successful at, and the capital markets aren't really efficient for that funding that type of work. So we had the idea, but we didn't really see it as the right place for us to deploy our capital at this early stage. Then BHP launched their Explore program, and it seemed like the perfect fit. And really, this is a meeting in the middle, because I'll come on to telling you a little bit about some of the things that we ensured are in the agreement to protect us against the things that you've just mentioned. But this was definitely a case of BHP recognizing that they need to come to the table as well, that operating with juniors and supporting juniors to be successful can be of huge benefit to them as well. So the whole Explore program was a fantastic idea, which really fosters partnership and basically brings the best of both worlds: the capital, the expertise, the patience of a large mining company, along with the more nimble, local touch, entrepreneurialism of a smaller company. And by harnessing the best of both of those, I think we can be really successful. And so when we went into negotiating this partnership, these alliances, we were already starting off with an understanding that it needed to work for both parties. And you're right, I've seen countless joint ventures announced where so-and-so major company is going to spend tens and tens of millions to go to 75% or something. But this first step, for example, to 51 might only be $3 million over 3 years. The timeline around that expenditure and when it actually occurs is very loose, and at times these projects just stall. Nothing's spent maybe until the last moment, or it gets dropped. If that low threshold of achieving 51% is met, but it doesn't have the scale or potential of a major asset, then again the projects can get stranded, because you're sitting there as a junior with a minority position in a project that a major doesn't want to move forwards, and you're a bit stuck, and it can be quite hard to buy your way out of those situations. So we've engineered this sort of from the ground up to avoid these things. The deal really has 3 main phases: a project generation phase, then an earn-in phase, and then a joint venture phase. And so the project generation phase is where BHP are going to spend $20 million US, or 31 million Aussie, over 4 years to explore the entire mineral belt that we've staked. And that's an annual commitment for 7.5 million Australian dollars to be spent every year. And when they commit to a year, they have to see that year through and see the expenditure through to completion. So what it means is there isn't any dragging our feet. We're straight into exploration and busy years of work creating value. What BHP get for that is only the right to select smaller targets to become defined projects. So again, anything that doesn't look like it's going to meet the size thresholds that a major mining company is looking for basically comes back to us 100%. So we've de-risked a lot of that early stage exploration through it being funded by a major. Anything that's too small basically comes back to us 100%, which is just fantastic.
I just want to make sure because for us and for the listeners, I don't think your main projects, well, your key projects that you just talked about, are included. So this deal entails all your land, but not the Pennycat and Rana projects, right? Can you just briefly summarize, like, which projects do you have in the company? The one in Norway, the one in Finland, and what is this deal, this BHP deal, covering?
Sure. So we have two assets named Pennycat and Rana. Pennycat, probably the world's highest grade PGE exploration deposit in Finland. And then we have Rana, which is a nickel, copper, cobalt sulfide exploration project in Norway. Separate to that, as a part of this BHP alliance, we have 2 large mineral belts where we have large land holdings. So one in the north of Norway and another in Finland. So essentially, those 2 named assets, Pennycat and Rana, we continue to move those forwards ourselves. And again, that goes back to they're more advanced. We see huge exploration and value creation upside there. We wouldn't want to give away at this early stage an interest in that. Our cash that we have today can be deployed on those assets to create real value over the next couple of years. So it's these 2 regional plays, one in Norway, one in Finland, that are areas of interest that the BHP deal covers. Yeah.
How do you get your hands on a project? I mean, you have a target of 3 to 7 or 3 to 8 million ounces at 7 grams. It's almost like an oil and gas type target, because you don't see that a lot, I think, in mining, where companies very early on give already a target. And perhaps this is not early on because there is work done on this project. But how is a company like this getting their hands on a high grade deposit with this size? I mean, everybody's looking for things like that, and you own it. What's the catch with this one?
Well, I mean, we did look for a long time for the right asset to go in on. In part, that comes down to network and getting exposure to opportunities. But also, we I think we presented a good route forwards for that asset. So it was owned by a private party. So we offered a route to get listed by acquiring it and bringing them in as shareholders in the listed company Kingrose. A lot of the time, people start with the asset and go out and say they'll go out and raise the money, and there's risk involved in that. Can they raise the money first of all? On what terms will they raise the money? How dilutive will it be? Can they raise enough to really move the project forwards? We were coming in with over 30 million in cash, a well-proven team, and the listing. So that gave us an advantage in terms of negotiating on the asset. And that project, Pennycat, it was drilled in the late 80s by the Finnish state mining company, basically, which is now Outokumpu. It's palladium dominant, and that was at a time when palladium was trading at $200 an ounce. And most of the world's PGEs come from South Africa and Russia, and particularly in South Africa, where you have a lot of the mine infrastructure, the processing infrastructure, there where they're mining the Bushveld complex. It goes on and on and on, and it has done for decades. So it was at a time where the commodity was less attractive because the focus was on platinum more than palladium. The world's PGE miners were happy to stay focused in South Africa. And then actually the Finnish state that were doing the work on that asset made a strategic decision to pull out of exploration and mining completely. And they basically focused on their downstream operations. So that perfect storm of events basically meant that they made this fantastic discovery, drilled about 100 drill holes, and then it never really went any further. And so a private company, people, good friends in my network recognized that opportunity, managed to secure the project, and then we brought it into Kingrose. And the final thing, you mentioned the exploration target there. So that's a JORC compliant exploration target, which is prepared by an independent expert in those types of mineral deposits. It's a formal thing that you can announce under the JORC code. But to be honest, they have a huge element of risk involved in them. So the level of accuracy is normally very, very low. It's not quite a resource. It's sort of an indication of what a resource could be in the future. I normally don't pay a lot of attention to those. They can be done and be quite promotional. But here it's a bit different because we have 100 drill holes. And the way these types of mineral deposits form, they're called layered intrusions. And they're basically very consistent. It's a big magma chamber, minerals rich in platinum group elements, nickel and copper, essentially rain out, settle on the floor of this intrusion. And so it goes on and on for kilometers along strike and down dip. So when you have a lot of data, and of those 100 drill holes, 99 of them hit mineralization, that's how consistent it is. You can then have a high level of confidence on what the scale of this project could be when we drill it more. So yeah, it is exceptional. It looks like it will deliver 5 to 10 million ounces one day in a resource, and at some of the world's highest grades. Not only that, it starts from surface and is situated 15 kilometers away from a major port and infrastructure. So in terms of where does the EU get its future supply of PGEs from, given the challenges with Russia and South Africa lately, we think it's a fantastic asset to fill that gap.
Yeah, from that point of view, I think the timing is almost perfect because all these European countries are making deals to support mining in Europe. But this project is in a Natura 2000 area, isn't it?
Yeah.
Can you explain
absolutely.
what that is?
Yeah. So Natura 2000, it's an EU designation. It's a low-level environmental designation. It covers about 20% of the whole of the EU. So it's very widespread. It's not a national park, and development isn't banned within those areas. But there is a much higher level of focus on protecting that natural environment that needs to be looked at from an early stage. So for us, that's been again one of the challenges that we've been working through there is to get drilling. We have to do quite detailed surveys of what plants and animals live there, design our drill roads and drill pad locations to minimize our impacts on those. And that takes a couple of years of surveying when different species are either nesting or different flowers are flowering, to put that together. So we're just getting to the final stages there. We've actually submitted that report. We've already had a positive response from the environmental authorities, and that's now just going through the final drill permitting phase with the mining department. We're hoping to get our drilling permits in the next 2 months. There is one more risk, though, under the law there, and being the democracy that Finland is. There's the ability for environmental NGOs or interested parties to appeal the drilling decision, and that can happen and lead to it going into an administrative court process, which could add another 6 to 12 months to our timeline for drilling. So that may push us out into late next year, basically, before we can drill. So that's one of the challenges with the project. However, the benefit of working in a place like Finland is you have a very clear rule of law, and if you do good quality work and you follow the right steps, you can have a high level of confidence in the outcome. And there are a number of examples in Finland where these administrative court processes have happened, and in every scenario, the drilling permit has been awarded without any real issues. Again, that's just where us in a stronger financial position have the opportunity to wait and work through that process, whereas other juniors maybe would find that difficult to wait for so long.
All right, and then you have also, this is Finland. Then you have projects or two projects, I think, in Norway, but they are in this in the Finnmark area, right? This is the northern territory, sort of Norway. Tell us a little bit about that area and also about the project.
Cool. So, well, we have one project called Rana, which is a brownfields nickel project, which we were exploring last year. But the one in Finnmark that's this big mineral belt that we're going to be exploring in partnership with BHP. And Finnmark is essentially really one of Europe's largest wildernesses. It's a huge tundra, a plateau, very cold in the winter, but gets beautiful summers. And it's the homeland of Europe's only indigenous peoples, the Sami people, and they practice their traditional culture there, which includes reindeer herding. So reindeer herding is not only a cultural practice, but it's actually a business. So there are large herds of reindeer that are herded there and raised for meat production. So that's one of the key features of Finnmark, where we have to make sure that what we do can integrate with their use of the land and not impact, not have significant adverse impacts on their ability to herd reindeer or practice their culture. So for us, that's really important, and that's why we've taken our time to build up this project slowly, and we've hired a really strong local team. So actually, a former mayor, Aina, the mayor of one of the municipalities there, is now our country manager. She comes from, she actually has Sami heritage and grew up in the region. So she brings that local context that allows us to understand what's important in that area to local people, and really focus on building trust from an early stage. And that's again where we're trying to set a new precedent really for how people go about doing exploration, rather than waiting to make the discovery to then spend money talking to people and working with communities. We feel it's really important that has to happen from day one, and actually before boots hit the ground. So you may see we just, alongside announcing the BHP deal, we've also launched a new website and a brochure or a leaflet aimed at local communities. And again, that's just us trying to raise the bar in terms of really good quality, transparent information, so local people can understand who is Kingrose, what work are they planning, when will they be there, and if they've got any concerns, how do they get in touch and share those with us? So all of that we hope allows us to avoid conflict, and not only that, actually understand how can we ensure that what we do there doesn't just create value for us as for our shareholders, but creates value for those local communities. And if you're not doing that, then the chances of a mining or exploration project being successful are just slim to none. And I think there are just countless examples that we could all point to around the world where projects are getting stopped due to community issues, a lack of social license. So again, I think what we're trying to do is elevate our game. If a company is going to be investing shareholders' money on exploration, you need to make sure you've got quality assets that really have the opportunity to deliver something that may actually be a mine one day. You need the right team with the right skills to be able to do that properly. And you need to be doing things like investing in your community and your environmental work. So before we even go on the ground, we do archaeological surveys and environmental surveys to understand what the sensitivities are to avoid issues in the future. So again, I think it's the way of maximizing the potential value creation and reducing risk.
I'm glad you brought up cost, Fabian, because that's something I'm always thinking about, as in how much more is this going to cost? You know, the community engagement and everything else that you're doing that you just told me about. How much more is it going to cost than if you were in, say, West Africa or in the Balkans? How much more money are you spending?
Well, the first thing I'd say is that I think regardless of where you are, there's going to be community and environmental aspects that people should be spending more time and money on. But you know, it's not a huge amount of money, but it does require some extra people and some extra investment. So I would say our full sustainability budget in terms of people and what we do varies somewhere between $500,000 and $1 million a year at this early stage. So it's meaningful, but it's you know, we don't think it's excessive, and it's hugely high value. For us, it's opening up a 200-kilometer long mineral belt with fantastic exploration potential for world-class assets that wouldn't be possible without that.
And the stage of these projects, the ones that you do with BHP, are they really at the absolute earliest phase, or where are those projects right now?
Yeah, they are early stage, but we have discovered mineralization. So part of what we did is we took there's huge government data sets. There's geophysics, there's geochemistry, there's geological mapping. There's, of course, we can complement that with satellite imagery and other things. We managed to get hold of all of that and completely reinterpret and reprocess that. And that even included, for example, in the Norwegian government database for the area we were looking at, there were about 5,000 geochemical samples. We found another 20,000 on paper sitting in archive boxes that we digitized. So, you know, we've created the world's largest sort of proprietary database for that region. And then we've done a lot of work completely reprocessing it all to generate targets. Now, we generated about 80 early stage targets throughout the mineral belt. Last year, we managed to get in the field for a couple of months before the winter set in. And immediately, those targets that were generated basically at a desk, we were really pleased to find we were stumbling across outcropping massive sulfides. So we've got rock chips from outcropping mineralization that's never been drilled, with multiple percent of copper, many grams of PGEs, gold, there's nickel, and these have never been drilled. So for us, that's just fantastic proof of concept. The other thing that's been done is we worked with the local universities and academics who were actually age dating the host rocks to this mineralization for the first time ever. And they've recognized that it's exactly the same age and the same rocks that host Sakatti, the world-class nickel copper deposit that Anglo found in the same belt further south in Finland. So all the right ingredients are there. We've got outcropping mineralization now at multiple targets. So for us, this year, with the backing of BHP, we're going to be flying large regional airborne geophysical surveys, as well as putting geologists on the ground to do mapping and more sampling. That'll roll into ground geophysics, which will basically generate drill targets for us next year.
IP, that is, then I assume.
It's IP, perhaps, but actually the main thing is EM. Okay. IP is good at picking up disseminated sulfides. EM will identify massive sulfides, and that's really what we want to identify, those really high-grade, massive deposits of nickel and copper.
Good. This is part of the first phase, right? Where the $20 million phase by BHP. I mean, what do they get for that 20 million?
Well, yeah, as I say, so they fund this huge regional program, the largest regional exploration program in the region. And they don't get any equity in Kingrose or the projects for that. They just get the right to then choose smaller areas to become a defined project. So this is what I was saying about addressing some of the issues with your more typical joint venture model. So that forces them to be selective and choose just the targets that they think have the scale to be a BHP size asset. Everything else we keep 100%. But then we go into the earn-in phase, and they've basically got to spend another 10 million Australian dollars per project, per target that they select to go to 51%, and then another 46 million Australian dollars on top of that to go to 75%. So in total, it's 56 million Australian dollars for them to go to 75% on every single one of the targets that they select. And so that's a significant spend, and there's a commitment to spend every single year. Otherwise, they lose it. So again, that drives the projects forward, makes sure that it's being worked on and generating news flow and creating value. And one of the things I'm really pleased about in the deal is that although it gives BHP the right to go to 75% if it's a BHP size asset and they spend all the money, but even if they achieve 51% and they don't go to 75, they'll actually drop down to 49. We'll have a majority and a casting vote on a management committee to decide work programs and be able to move the project forward. So the way we've structured this is that there's significant spend every single year. BHP have a right to go all the way to 75%. And if we end up with 25% of an asset that isn't big enough for the world's largest mining company, then we're going to have done very, very well. But anything less than that, we end up retaining a majority position in to continue creating value on and moving forwards. So again, I think it's pretty industry leading from that point of view, where it's a win-win for both parties. BHP ultimately are interested in finding world-class BHP size assets and owning a majority. Well, they have the opportunity to do that. We're interested in doing that as well. But if something small is found that could still be hugely valuable for a junior, we don't want to be stuck in a situation where it stalls and can't move forwards. So again, this deal allows us to keep those projects moving forwards and to retain a majority in them.
So you've got, sorry, one more thing. So you've got this 7 million, potentially 7 million ounces, between 3 and 7 million ounces in this early stage JORC in Finland. You've got this like sort of huge area to explore with a number of targets already together with BHP, where what you just explained, they have to spend quite a bit of money before they get any interest. And then you have Rana. I want to cover Rana as well, because you purchased that also in your term, I think a year ago or two. Yep. What is that? That's in Norway as well.
Yeah. So Rana used to be an operating nickel, copper, cobalt mine. It operated for about 12 years, and it closed just over 20 years ago with low nickel prices. It's located by a port town called Narvik. So this is a year-round ice-free port that currently ships out all of Sweden's iron ore. So the big Kiruna iron ore mines in Sweden, there's a rail line that comes across the border into Norway, and this is where all of their iron ore is shipped out from. So with the old nickel mine and the active shipping of all the iron ore from a infrastructure point of view, it couldn't be better located. And that is really important. And maybe some people won't recognize this so much. Base metal assets, infrastructure is so key. And that's different to an extent to something like gold or even diamonds, because you can put gold bars on a helicopter and fly them out and get paid. If you have an asset, and we've looked at projects in the far north of Canada, 300 kilometers away from the nearest road, you're producing a concentrate and many tons of it, thousands of tons of it, and you need to be able to get that out to get paid. And so often the infrastructure requirement to actually put in a road or a rail over hundreds of kilometers of tundra and swamp in Canada is just going to make it almost impossible for a discovery to be economic. So that's just a really important part of the picture here, where we saw this is a great nickel opportunity, but with that infrastructure in place. And essentially our idea there is that there was this mine, and that's kind of symbolic of a lot of the things we see in Scandinavia. There was a mining focus. People in many decades ago, the focus was in producing metal. So exploration would discover some mineralization, and they would focus on delineating a resource that they could then put into production as quickly as possible. And actually, a lot of the wider exploration was forgotten, and that's what happened here. We've got a huge prospective area with the right geology. There's this mine sitting in one small part of it, and the rest had hardly been explored. So we've taken new geological understanding of these types of mineral deposits, modern geophysics over that area for the first time ever. And we're finding new zones. So 4 kilometers from the old mine, last year we drilled in some of our first holes. We had 27 meters at 0.7 nickel, 0.3 copper, and some high-grade cobalt. This is a completely brand new discovered sulfide nickel target. And that sits within 1.6 kilometers of outcrops of massive nickel, copper, sulfide that are basically undrilled. So this year we're going to be rolling out. We think we've cracked what techniques work for targeting at Rana, so we can roll out that geophysics and mapping to define more drill targets, and then test those. So we've got some really compelling drill targets there ready to go, and we'll be drilling there in August on that project.
What I wanted to ask, or what I'm getting from all this, is that you basically are in no shortage of money, which is a good position to be in. But also asking, well, because you have your own money and then BHP spending money on the other project, so things are happening. What I'm also asking though is how do you, and maybe I'm kind of projecting here, but if I had too much money, I think I might waste it. Haven't been in that position yet, unfortunately. But how do you not waste your money? Basically, is what I'm asking.
It's a good point, and actually, it's been an interesting situation for me to be in. The previous company that I ran, or others that I've been involved in, more often than not, most juniors are raising money every 6 or 12 months. And so this, again, part of what attracted me to Kingrose was the ability to do things differently, to have a 3 or 4 year outlook, and create a business that can actually have longevity over many years, and have more than one opportunity to create value. So rather than being a single asset sort of roll of the dice with enough money to get us through the next 6 months, which is basically a very speculative, high-risk bet, what we have the opportunity to here at Kingrose is create something that we think's got a lot more substance and a lot more opportunity at creating value by having a longer time frame and a high-quality portfolio. But it is really important that we're always reviewing what we're doing and making sure that we're not spending money on the wrong things. So, what seemed like a good idea a year or two ago, if the facts change, then we need to change our strategy. So we're continually assessing what we're doing and where we're spending our money. And to be honest, we are spending a bit less money, for example, on the Rana project this year than we did last year, given the weakness in the nickel market. Now, maybe that's starting to pick up again. We'll see. But the weakness in the nickel market, investor sentiment not being particularly strong around that commodity. If we drill some excellent drill holes there, is it really going to get recognized in the market? But then we also look at it from an exploration point of view. What's it going to cost? What's it going to take to make a big discovery on a project? And do we have the cash to do that? And where does that leave us? So we're continually assessing, our strategic options to make sure that we are getting the most out of our money, which ultimately it's shareholders' money that, it's our job to spend to create value on their behalf. So look, it's a fair question. And I think the main thing that we do is make sure we ask that question ourselves on a regular basis to make sure that we're focusing on the right things. And just finally, again, I've talked about being honest about good projects or good people and things like that. Again, having more cash allows us to be honest about our projects. So rather than feeling the need to promote an asset to be able to raise the next tranche of money to keep the company alive, we can be a lot more objective about our investments. And if something's not working out, well then, I think all exploration companies should have the guts to say, we're going to stop spending shareholders' money on an asset that we don't think is going to make it, and we're going to focus on something that we think will. Now that tends not to get received very well in the market, but actually that should be a positive signal from a management team to investors that are backing a team to test projects over a bit of time to ultimately be successful.
Are you so you've got, I mean, it's quite a bit. I think if we wanted to, we could talk for another 2 hours, I think, because we didn't even go very deep in all these projects, because otherwise we would really talk for a number of hours. So you have like this big project in Finland, which is pretty impressive, although it's Natura 2000, that's a risk, but still. Then you have Rana in Norway, and then you have this big land package in the north of Norway. I mean, do you have enough? I mean, I already get that this is already quite a bit to. I guess most people cannot even deal with 2 projects to really get it. Is this?
Yeah.
Are you busy with this, or are you looking for other opportunities while you already have 3 or 4 of them sitting there?
We are busy. We're certainly busy, and we need to be careful not to be spread too thinly. And also, just from a market perception point of view, it can get pretty confusing when a company has too many assets. It's quite hard to value a company like that. So we do need to make sure we get the story right. But ultimately, exploration is high risk, and you do need to test multiple opportunities. Something we are doing, we are looking at other assets, because essentially the BHP regional exploration opportunity now is quite self-sufficient. We've built a really first-class team. It's well-funded, and that can basically operate semi-independently. I'm very involved, but at the same time, we put a good team in there. It's got the funding and a multiple years sort of time horizon associated with it. So that can work kind of independently. And because it's early stage, it will take 2 or 3 years to generate those really exciting drill hits and something that the market can get excited about. So then we've got Pennycat, which is going through this permitting process. And as I mentioned, that may not actually be allowing us to drill until almost 18 months from now, in late next year. So again, we've got cash right now, and the market has been quite weak. It's picking up at the moment with commodity prices doing well, but we see a lot of low valuations out there. And we're also only really seeing meaningful investment into more advanced projects, things with a resource or on a development path. So I guess the short answer is, yeah, we are actually looking for another asset, but something that's more advanced, like a resource development stage project, ideally focused on copper. We really like the thematic around copper. And I think that'll give us a more advanced flagship asset that we can put our cash towards creating value on, and then be able to raise money for. That's the type of asset that we're seeing more sophisticated investment willing to get behind, while the BHP work delivering exploration pipeline targets sort of over the next few years. And then when Pennycat's ready to drill, it's such a no-brainer. It's easy to ring fence a few $1 million to put rigs on that project and get that one moving once that comes through. So yeah, there's a lot going on, but for us, that's also part of the opportunity here. We don't live and die on one asset. We've got to create the opportunity to create something, multiple avenues of creating value. And as each of those either fails or is successful, we can make decisions around the best way to create value for shareholders.
You mentioned the word raising money. So the project, I mean, you're looking, and what you're looking at apparently is big enough in scale that you even think about raising. I mean, you wouldn't, with $40 million, you're not going to raise for a small drill place somewhere. So are you looking at very big scale type things like producing projects, development projects, or?
Well, we're looking at a range of things. When I say that we're not necessarily saying that we would be raising money at the same time as doing that deal. Actually, we like the idea of being able to do a deal and create value with our cash today. But I think any junior should always be thinking about, it will have to raise money at some point, and what catalysts does it need to deliver, or what value does it need to create at that time when it does need to raise money. And again, that's how we look at strategically at where we spend our money. What can we reasonably expect is the outcome for investing in, different ways. And ultimately, we need to find the strategy that once that money is spent or nearly spent, puts us at the highest possible valuation and the best position to raise more money. So again, it's just about thinking ahead. It doesn't mean we've got a capital raising coming in the next few weeks or months. Actually, it still could be a couple of years away. But again, it's just thinking about setting ourselves up for the future.
Good. Well, thank you, Fabian. Luca, I think by now you probably have to go, Fabian. I also don't imagine you want to keep talking for us for the rest of your evening. But it's been well, it's nice to meet you. It's been a good conversation. Hopefully we can do this again soon. But I'm all out of questions. What did you think? Do you have anything else to add here at the end?
No, it's all good, guys. Thanks very much. Good talking to you, and hopefully, you like some of our approach. It's a little bit different to some of the other companies out there, but yeah, we'll see how we go. But thanks for taking the time to have me on.
Thank you so much for coming on.
Cheers.
Thank you.